A year ago, Greece came to the market. How do you think the bond markets are going to take this news? And would you buy Greek bonds if they come back again this summer?
I think the market was expecting a deal, of course. Certainly wasn't expecting a failure. But it's always good to see the negotiations finally get to where they're supposed to be, Manus. I think in terms of whether or not Greece comes to market this summer, we're still in a situation of asking for the regular investors in the core European bond markets, is this an off-index bet, or is it part of the existing benchmark? And I think still at the levels they are, and given the size of the Greek market, this is going to be only a marginal decision for quite a lot of core investors. That having been said, I mean, the yield is the spread is so wide that if you have capacity to buy it in your fund, if it's within the rules, you can see why it'd be hard to avoid it.
Yeah, you can see it gets back on a few radars, can't you, Laurence?
Right.
So, I mean, but we've got a quote here from Christine Lagarde of the IMF, not necessarily playing quite the role that they suggested they might do here, confirming that medium term they're happy with the expectations for Greece and the ability to service its debt, etc. But long term, they have their reservations. And I've got a chart of debt to GDP for Greece. I just wonder how close really we are to the end of this story, because you're, 8 years on, with extended maturities once again for 10 years.
Yes.
Sorry, extended maturities and added a grace period of 10 years.
Well, I guess the end of the story for sovereign debt never arrives for any sovereign. The question is really stability. And I think it's certainly the case that with these super low interest rates we've had, every sovereign, including every European sovereign, has a debt service cost which is manageable even at a high level of debt to GDP. I mean, over a horizon mercifully much longer than one that I would consider, you have to ask the question, if interest rates were to return to anything like the high levels we used to see in the 80s or 90s, would it be feasible for sovereigns to maintain their debt? As you know, there's a big school of thought that says sovereigns, once they breach a threshold much lower than this, can never repay their debt. But the truth of it is, if nominal GDP is high enough, if the debt dynamics change, it's not something we can know for now.
No.
But
Okay.
it could be all right.
Watch.